Hey guys, this is Danny. This is a sort of a hobby I have, investing, and I thought, hey, I'm gonna make a video series of it. I already have a video series. I make my results in a real cash economy game, Entropia Universe. It's a game where everything in the game is real money, so you're playing with real money, and I enjoy doing that series. And I thought, hey, boy, I'm gonna make a series on investing, which is frightening. I'm definitely not a financial guru, although I really love investing as a hobby. So, take it for what it is. My sort of goal is obviously I got a lot of retirement accounts, and not so much you can do with those. A lot of funds and whatnot. So, but in my you know um, uh, funds that I invest myself that are not in investment accounts. I like to do sort of high yield investing. At this point, a lot of what I have is in cash at this point, cash reserves, short-term bonds. But obviously, I think that at some point, this is my guess, and everything here is entertainment. I mean, take it as that. I am by far not an investment guy at all, and this is not investment advice. So just take it as for fun, and see. Um, this is fun and frightening, because I'm sharing my investing with you. If you choose to watch, so this could be it's embarrassing, terrifying, maybe, hopefully, I look good a little bit, maybe something. I don't know. We'll see. It could look very bad. Uh, um, but my thought process is, and this is a margin account. I don't have any margin at this time, because benchmark plus 1.5 or something. What's that, like, 7 7%, 8%? I think it's near 8% right now. But you know, um, if over time the rates fall, we could even get maybe 3%, 4%, 5%. I think this could be very interesting as margin. Starting off pretty small here, and slowly adding. I don't like to build things too fast. I'm not in a hurry. I got a lot of stuff I could move here, but it's not a race. I'm taking my time here. Slowly building. So the returns, it's currently at 8.85%. I mean, it's not it's decent. So what have I been building so far? And this could change around quite a lot. But right now I'm just trying to. My goal is make a solid base, with the thought of margin in the future. I may do some margin. I already have done some margin here, depending on moments and stuff. If I see something that I really like, I don't mind, getting some margin in. But right now, I'm more concerned about just building a solid base, hopefully. Although, some of this, not everyone would consider this a solid base. Now, like, for example, the PSEC, I'll admit that's a pretty wild one. Um, it's pretty wild. It's That one is sort of a business development company yielding 13%. And I don't really think it's really helping the margin much. It looks like the margin short is like 90%. So I think that really adds almost nothing to the ability of the portfolio to margin. Although it does pay a monthly dividend, so that will cut into the margin interest. Um, but I mean, for example, Income Realty, it's in the portfolio. That's really solid. My hope is that um, continues increasing the dividend. The dividend is pretty nice as it is. I mean, um, you know, um, let's say dividend is 6% ish. 6%, yeah. So at 6%, and obviously, especially, like, if margin rates come down, that'll actually be above the margin rate. Plus, I think that this is also a growth play. That's definitely a growth play. NYL, that's a mortgage REIT. Global Net Lease is a REIT. These are real estate investment trusts. Very high yield. Maybe shouldn't be in those. I don't know. I like high yield. And you're gonna see that. This is just me doing what I do. And a lot of people say don't invest this way. Worry about taxes. Well, it's true. I mean, worry about taxes. But on the other hand, you think about it. You hold like an S&P fund. You're not paying the tax. Because almost none of it it's almost all growth. Obviously there's a nice little dividend. It does significantly add up. Especially you think about the dividends add up over time. Over half of your returns are dividends over a long period of time. And think of it this way: if you're investing it, let's say you hold the S&P for 30 years, and the dividend's 2.2%. Over 30 years, that's and you're buying stock with that. But it is going to continue to be about that because they slowly increase their dividends, even though the price increases. So we can just say that maybe it does stay about that same 2.2. Maybe it's not that now. I don't know, but that's kind of the historical average. But the point is that those dividends are going to buy over 30 years are going to buy 66% more stock, and those stocks that they buy are also going to produce dividends, which are going to buy more stock. Not just spitball. Maybe all those dividends buy twice as many stocks at the end as what you started with. So already the dividends, because they purchased an equal amount of shares to what you already bought, plus then those shares will appreciate. So actually dividends give you more, even on the S&P, over a long period of time than the growth, because it's dividends plus dividends on dividends plus growth. I know that's a weird thing to think about, but yeah. But the point is, at the end of that, you sell. That's a big capital gain. Whereas here, you're paying all the taxes up front. If I choose to sell these things, there's really not a lot of capital gain off any of this. And I have actually moved around. I've sold some, so my unrealized P&L doesn't look super great. But I tend to sell when a little bit ahead, especially on high dividend. I've already gotten a good dividend off of it. If I get a little bit ahead, sometimes I sell some of it to buy more stuff. NLY was a little bit bad of timing. Other stuff was pretty decent on timing. QYLD, that is a covered call. NASDAQ, they're selling calls, covered calls. The dividend is 11%, and it pays monthly, so it's like 1% a month. You're talking PSEC is monthly too. That's 1% a month, basically. I think, yeah, 1% a month. If it holds, if it holds like that, I think the sort of price is a fear of deterioration of the portfolio, and so these are some risky things, but if that sort of thing keeps that, it's a pretty nice play. But you never know. But this is sort of the base I'm building of my brokerage is outside of retirement plans. And my sort of goal is to build a portfolio that produces $20,000 a year in income. I don't have quite enough capital for that, even at a high yield yet, but I'm pretty close on all the accounts. Obviously, but a lot of it's invested, as I was saying, pretty conservatively at this point. So maybe a little bit about me. Yeah, I'm 30, 39, almost 40, turning 40. Turning 40 this year, later on. So yeah, I don't, I work in customer support. So most of my stuff in cash reserves, mainly because the rates are good, but also just I really had to kind of focus on my life for a while. I had a wife who died, and took a few years to figure stuff out. Um, it wasn't really in a good place to be doing anything like this. But a couple years ago, so now I'm kind of getting back in, having some fun with it. So yeah, seeing what I can do with things here and have some fun with it as I go. Um, but yeah, oh, and then those other slides. So obviously these are my holdings. You see the returns, the holdings, and then the margin in there, you know, and there is no margin. Actually, there's the leverage is, I think it was 0.99 if I remember. We'll see it when it flashes. I'm not. I'm just letting it slideshow so I can talk better. Maybe as I get more comfortable, I'll click through, but probably not. That's not my style. Probably just let it slide. And then the last three are things that I'm looking at. I like well, the first one is a very frightening play. Um, so um, container there's way too many container ships, but there's a lot of congestion right now, a lot of late deliveries that really pushes up pricing, push up profitability. But if issues resolve in the container shipping market, that could be a pretty dangerous play. But it pays out 50% of the dividend over the course of the profit over the course of the year. Um, it could be a pretty big payout this year. Who knows? I don't know. Maybe not. Uh, it's a scary, frightening, wild idea, and I have been invested. It was a roller coaster. I got out with a bit of a profit. Um, I invested completely at the wrong time, but then it swiveled, and I was like way down. I was like $13,000 down, and that swiveled up, and I was up 15% up, and I like sold out. I'm gonna get out, and then when it swiveled down a little bit, I bought a tiny little bit, and swiveled up. I got a little more profit off it. Um, but I'm watching it. I'm watching it. Especially even still, the rates keep going up on the container indexes. It's terrifying. Exciting. It's very, I don't know what I'm doing. That's like wild speculation, but that's Zim. Um, who knows? Oh my goodness. Um, again, this is not financial, and I think you can tell. I'm I don't know. I'm good in customer service. I'm not. This is not investment advice. This is fun, and uh, maybe why this is fun is I'm sharing with you what I'm doing, and it's exciting and I guess the sort of thing of sharing what I'm doing actually um uh, uh, I guess because Entropia is a little bit like gambling, and maybe this is a little bit like a gambling thing. Not only am I not only here am I gambling, not exactly. I mean, I don't see this as gambling, but in a way, sort of intensifies it. You know, sharing what I'm doing, it makes it even more. Um, it's like there's a stress of playing chess, and then when like five people are watching you play chess, it's even more. Um, but that I guess it depends how you feel. Does it stimulate you? And I when I've played games like chess or Go, I used to play a lot of Go. Um, I never really was quite into chess as much, but I became a little of a master in Go. But in Go, I always played my best. Always, or mostly played my best. But I always felt the best about playing when people were watching my games. I remember one game online. Somehow I was playing a really high level player. I don't even know why they played me. And I think 50 people were watching. I'd never had that ever happen before. And I was completely lost. And then I found a sequence of moves. It was 25 moves deep to win the game. It was not really that hard of a sequence because it was like a straight line pushing things together. But if I'm this gets pretty random, but hopefully people appreciate that. If not, I mean, it is what it is. I mean, you appreciate it or you don't. But it was I've never seen anything that deep, even though it was very simple, and I won the game. And I was going through the comments and everyone thought I lost, and then people like as I was going through that sequence, some people started to realize that I had won the game. But the guy had made a mistake, but he did not think that a player like me could see 25 moves deep. Or maybe he just didn't see it. I don't know. But the thing is, I can't see 25 moves deep. It was just, well, I can. It's at the edge of what I can do, but that there were 50 people watching it, it drove me to my best. And it also, it's terrifying also, but it also adds to the excitement. Normally people don't watch my games, and that was just a sort of freak thing that happened to be playing such a high level player, and that was very gracious of them, and I got very lucky. Um, but um, but it drove me to my absolute best game. I don't think I ever played as good of a game as that one. That's how I felt about it, at least. So that's the sort of thing that, to me, sometimes when people watch what I do, it drives me to my best, and it's also scary, but I mean, but it adds something that, to me, like, if I buy something like Zim, that it it sort of intensifies the emotion. It's one thing to kind of fail and just kind of keep it in your back pocket. But now that it's out there, what you're thinking, it really intensifies what you're doing, the thought process, everything. Just something that I'm looking forward to. Unless this goes really badly, then it may stop. But I hope you understand if 10 videos in and this just becomes super embarrassing, I do stop. But um, I don't think it'll be super embarrassing. It may not be super good, but I don't think it'll be super embarrassing. VUSB, that is the complete opposite of Zim, is the least terrifying thing in the world. That is ultra short bonds. Almost zero fluctuation in price. I mean, yes, there's fluctuation in price for sure. But very limited fluctuation in price because they're ultra short bonds. Very stable. Low expense ratio. Decent yield, 5%. I mean, obviously, as rates go down, the rates on that will go down. But that is one of the thoughts of that is if you're going to build on a margin account, um, that's something ultra solid as a base. So having some of that in there may not be bad. On the other hand, it's a pretty lukewarm idea, you know. But I wouldn't mind some of it in there. It's gonna obviously, drag on the returns a little bit. But I'm okay with that 5% in there for a little bit of it, especially with a lot of these barn burners. A lot of craziness in here. um, so that's the other one. And the other one I think was BP. You know, I, it's got a good dividend, 4.72. Biggest thing is that the price earnings is low, and I think that the forward price earnings is even lower. So trailing price earnings is 11.4, forward PE is 7.6. Yeah, um, I think that it's interesting. I don't know that I'm like super jumping on that at all. It's just something that struck me when I was looking. It's kind of mid 52-week range. Hmm, let's look at the 5-year. I mean, it's kind of mid, I guess. Yeah, I mean, I don't know. It's something I'm watching. I also noticed just, I kind of look a little bit at, not exactly a technical analysis, but I like to look at it in my own way of just watching the chart to see where I think, Um, but I like things on the downtrend. Um, they have yield, just because usually they do uptrend. If it's a good company, a good thing. And the thing is, it's a little bit, to me, downtrending, although it did uptrend. But if it downtrends again more, depending, that's also going to be pushing the yield higher. And then there's better chance for appreciation. So I mean, those are my three of my thoughts. I think there are a lot of other ones. I'd like to get some energy companies in there. Um, I like more REITs, but obviously price is everything. You know, a good company at a bad price. Well, I mean, I guess a good company at a bad price is better than a bad company at a good price, but I'd prefer a good company at a good price, or a good company at a fair price. Um, but I mean, these are all my thoughts. We will see where this goes, and hopefully you enjoy this. And just the only thing that, I'm not getting anything out of this at all, other than fun. And maybe eventually someday I'll get into be like an affiliate or partner. I forget what the term is with YouTube, which is a long journey. So I mean, if this does well, maybe that'll help toward it. But I'm not getting anything out of these. But it's my hobby. Um, so the only thing that, support this is if you like the video, subscribe to my channel. Both of those are free, and maybe even leave a comment. All of those help the algorithm increase my visibility, and support building, my path to become like a partner or affiliate or whatever that thing is that they have, which is quite a long journey. But I hope as a just a fun dream, I would like that. So if you just do, if you like it, support and appreciate that. So hopefully you enjoy. I hope you have a good time investing if you invest. But of course, it is you and you only that are responsible for the financial decisions you make. All right. All right, peeps. But I hope you enjoy this. This is just entertainment, so have fun with it. Okay. All right. Till next time. Okay.